All right, so I made a video last week about the ETFs that I'm buying, and that actually kind of got me to think that, hey, I should do some research on some other ETFs that might be good to buy, and I did that, and there's actually three more that I found that I want to talk about. The first one is actually a bond ETF. First things first, though, if you get value out of the video, please like and subscribe. Check out the links below. Very much appreciate the support. So this is CDX is the ticker symbol. It simplifies high yield bond ETF. I listened to the latest Macro Voices podcast this past week, and the guy they had on actually runs this fund. And I looked it up, and it's actually done really well. So I'm going to be buying it as my primarily bond fund that I hold. I typically hold two different bond ETFs. I'll always hold a small position in a T-bill ETF. Usually I do either BUX, BUXX, or BIL. SGov is also very popular as well. And then the high yield ones, the best ones that I found are SPHY and USHY. This one has actually outperformed both of those, which is why I'm going to make it my primary fund going forward. And as we get into it here, it does say it's an 11.5% dividend. That's not actually true based on the previous handful of months. Their dividend is kind of all over the place. Trailing 12 months, that probably is what it actually is. But if you go based off their last month's payout, it's actually just under 8%. It's between 7.5% and 8%, which is really good, right? That's really good. Obviously, this fund is going to be sensitive to interest rates, so that's something to keep in mind for obvious reasons. It looks like they did pay a special dividend this past year, which probably accounts for why the dividend was higher. But if you look at this fund, the main reason that I like it here is it's actually done extremely well compared to stocks, right? Like, for example, let's go back about a year. If we go back about a year, it's actually outperformed the S&P 500, which is quite impressive. If we go back year to date, it is also actually quite easily outperformed the S&P 500. This fund's actually up, when you include dividends, it's up 12%. The S&P is basically flat. So that's for the obvious reason why I'm buying this fund. I think it's managed very well. Honestly, I don't know the intricate details about how he runs it, but from the gist of what I got from it is they go long the very good quality companies, at least as far as their bonds go, and they short the low quality companies. And that provides kind of a hedging aspect, which clearly has done quite well. So that's why I am buying this ETF. The next one is SPMO. This is the Invesco Momentum, S&P 500 Momentum ETF. This one, the reason that I'm buying it is actually very, very, very simple. It has always outperformed the S&P 500, right? Go back 10 years, it's up about 350%. The S&P is up 241. If you go back about 5 years, it's up 120. The S&P is up 75. If you go back 3 years, it's easily outperformed. Over the last year, it's up 21%. The S&P is up 10%. And even year to date, it's up about 9.5%. The S&P is flat. So this is, like I said, it's quite obvious. I'm buying this because it's outperformed the S&P 500 over virtually every single time frame. And something you have to be careful of is a lot of ETFs and companies that outperform the market, they do it when times are good, but when times are bad, they're actually down quite significantly. You want to be careful with that because our time's always going to be good. But this is the S&P. Essentially what they're doing is they're just overweighting towards the companies that are outperforming over the short run. That's really all they're doing. So they're really not taking, it's not like they're using leverage or anything necessarily. Theoretically, you could argue they're taking a little bit more risk, but are you really taking more risk when you're outperforming when the market is down? Like they outperform year to date, So I think that this is another ETF that kind of a no-brainer to have a position in. Personally, I don't think I'll ever have a massive position in any ETF. The main reasons that I buy them is it's a way to mitigate risk, number one, and number two, most ETFs you can trade options on, which is another easy way to increase returns. And then the last one I wanted to talk about, I did talk about the importance of international stocks slash ETFs recently. I think this is a trend that has emerged over the last, basically the last 6 months or so. And I think it's a trend that probably will continue, right? I mean, you have, whether you agree with it or not is irrelevant. I mean, Trump's talking really hawkishly towards a lot of these foreign countries, and that is scaring a lot of people. Whether you think it's for good reason or not is not really relevant. The reality is that it's scaring people. And love it or hate it, that's going to mean that Europeans are going to buy more European stocks as opposed to American stocks. Canadians are going to buy more Canadian stocks as opposed to as American stocks, et cetera, et cetera. And I think that you need to be looking at some of these international stocks and some of these international funds. This is pretty much the best one that I found. It has underperformed quite a bit over the last decade, but honestly, I've yet to see an international fund that has outperformed over the last decade. This one's outperformed. This one's actually almost the same over the last 5 years. It actually has outperformed. Virtually none of them, even over the last 5 years, have outperformed, so that is actually quite impressive. Over the last 3 years, it's outperformed. Over the last 2 years, it's outperformed. Going back a year, it has actually outperformed by more than double. And then over the last, over the year to date, it is also easily outperformed. It's up 22% versus the S&P being up roughly flat. So this is the reason I'm buying this one right here. I think that it's an absolute no-brainer. I think that there certainly is risk to, even if you're American, frankly, even if you're American, there's a lot of risk in being involved exclusively in American stocks. But personally, I'm not even American. I think that, like I've said, if I had to bet on any major foreign index outperforming the S&P over the last 5 years, I don't think I would do it. But I still think that the S&P has absolutely destroyed virtually every single major foreign index over the last 10 or 20 years. And I think that they probably, not for sure, but probably will outperform. But I think it's going to be close. I really think it's going to be close. And what happens if something really bad does happen in the States? You're going to be really happy that you have some international exposure if that happens. So, like I said, I think that it's a no-brainer to buy all of these ETFs. You get a very high-quality bond fund, in my opinion. You get a fund that almost certainly will outperform the S&P 500. It has over every single period of time, going back 5 years, 10 years, 1 year, year to date, you name it. And then you get a really good international fund. Obviously, there's other ones that you could argue is good, but these are all very good. And frankly, this is the best international fund that I found. I did a decent amount of research. Another important thing too when you're buying ETFs is that there's some that have 50, 100 million in assets under management. Personally, I think you probably want at least $250,000, preferably at least a half a billion, not a half a million, a half a billion in market cap, just because once you get under 250 million, for sure 100 million, you're going to get very little volume. And if you're dollar cost averaging, you're going to get filled with some bad prices that will reduce returns 1 or 2% per year even. So that's something you have to keep an eye out for. And even if you're doing limit orders, it's going to be harder to get those orders filled. You're going to have to be a lot more patient. You're going to have to put more time into it. So I'd love to hear other people's feedback. Are there any funds that you like of the ones that I've missed? And what do you think of the ones that I brought up? So like I said at the start of the video, please like, subscribe, comment if you get value out of the video, and check out those links below.